Hello, fellow traders, and welcome to another daily recap for the Ticks and Trades channel. Today is Monday, April 15, tax day. It's about 4 minutes in front of 9 o'clock a.m. Eastern. We have a number of levels on the chart to trade against. What we do is we use these levels and these spiders to trade against in the E-mini futures. They act as our trigger points to enter trades, depending on how things are looking on our other time frames and indicators that we have. I waited to see what would happen after an 8:30 a.m. data announcement, like a retail sales number or something came out. It jolted the market. Prior to that, they had been hanging around this 513 level. They gapped up in the pre-market. So they jumped up. They went a little above 515, 16 cents, 17, something like that. They came back down. So they're currently hovering around 514.57. And not too surprising in a way. That's not something we're covering here, but I'll just mention that on Friday at the close, there was a little bit of indication that some professional buyers were stepping in to push the market up. So the fact that it's been pushed up at this point in the morning isn't too surprising. I normally would take a trade in the pre-market at a level that I had calculated before, but they did launch right off of this 513.14. It would have been good for a nice little spike, but you don't know what's going to happen. That's not the way I have my strategy set up to trade. I just trade during the open session, specifically between 9:45 a.m. and 3:30 p.m. But anyway, all that being said, we'll circle back around after the market closes to take a look at all the trades taken in the E-minis based off of these levels. See you then. It is now 6:30 p.m. and when I made the recording this morning, between then and now, the market has fallen over 100 S&P points. So the bulls were not able to sustain that little bounce that they had in the morning. So this looks, not like a lot necessarily, but there's quite a bit of movement. Like the levels are spread pretty far apart. So I'm just going to expand this out so we have more real estate to work with here. And I'll talk about how these should have been traded. I'll show you my actual trades. They were mostly a fiasco. I gave some money and some points back to the market, but none of these are adjusted, but if you were playing by the rules and you were adjusting these with a 5-cent buffer as price came into them, this would have been a long trade because they never got up to 515.65. That would have been the operating level, but when they came down into this 513.19, triggered a long trade. I did trigger a long trade here, and sticking to the rules and waiting for a signal and an indication that something's wrong and you want to reverse, you would have lost 14 points and reversed, and you would have got a base hit on the reversal, not even trying to get more than just the 4-point base hit and trailing or anything like that. So you would have washed some of it off, but you would have started the day out in the red. What I basically did, and I'm not really sure why, I'll try to talk through it in the recording, but I just kind of had second guessed a few things, ignored my own rules, reversed, and then changed my mind, thought, well, okay, maybe they are going to go up higher and try to get some important areas higher up. And so I went long again, and then, got wrong foot on that and just had to jump out and exceeded my max limit loss for one contract for sure, because I was only trading one contract at these levels. So down at 510.65 operating level, this was a pretty classic consolidation at a certain level or certain distance above the level for a certain amount of time. So I would not want to take this trade again when it comes into it. Basically, it's going to be a fumble, most likely, and it was, but it's good for a recycle. And I was ready to redeem myself and go short here. And I'll show you what happened when the price got up into it. It was just a kind of a silly mistake on my part because, first of all, this is the calculated level, 510.60. So the long trade, if one had been taken there, if price had come straight down into it without consolidating, the trigger would have been hit 510.65, 5-cent buffer. But as price was coming back up into it from the underside, for a short trade, you would adjust it to 510.55. And I did not do that. So I missed it. I missed it by pennies before it fell away, and then I'm not going to chase it. And yes, you would have taken this trade by the rules, and it would have given you a fumble there, and it would have reversed and got a base hit on that, and then never got to the bottom level. So I'll show you in the tracking log what all this translated into money. You would have ended the day in the red just based on the rules, because you don't really know at the point, if they say had come up to 515 first, 515.70, and pulled away, you don't know they're going to go down all day long. I mean, there were indications, I mentioned this in the morning, at the close of Friday that looked like they were going to push the market up a little bit, and they did, but there was a lot of, it was just kind of a nothing type of situation. Like nothing happened of that. it was fake out, whatever you want to call it. They end up falling for the rest of the day. And we might even look at a daily chart later, some other larger time frames to get a bigger picture because some pretty big moves lately, not surprisingly. But anyway, let's jump into my trades. I'll try to talk through it and explain the mess that I got myself into. So at this point, it's 9:45 a.m. I'll start rolling this recording, waiting for them to get up to 5:15.65 to go short. They did not do that. You already know that from looking at the entire day. Trigger is at 5:13.19 to go long, and I'll just scrub ahead. And well, it happens pretty fast. So let me just tell you what happens in case you miss it. I went long here. They fell down. Like I said, I can't explain why I did this. There's no rhyme and reason because the rules say stick it out because you don't know how much support you're going to get at these levels or resistance necessarily. I mean, there are clues you can look at on other tools that you will use based on the rules and other resources that I have. A lot of other indices and different time frames, moving averages, just a bunch of different things that I'm looking at. And there's no reason that this trade wouldn't have worked, but the bears were stronger than the bulls. So anyway, when they came down and I went through it, so I reversed at precisely the wrong time. And we'll take a look at that. There we go. I'm in the trade, just one contract. And as I get below the fumble threshold, and just want to pay close attention to this point. So I'm long. Okay, you see it right there. I went short right here. Not when I should have. Yes, I'm exceeding the fumble threshold, but I haven't given the trade time to develop at all. And so when I went short there, thinking, well, I'm just going to ride this down to the next level because it looks like the bears are in control here. That's when the bull stepped in. So that is frustrating when this happens, and I should know better than that. And so to add insult to injury, when they started getting above the entry point, the original entry point at 5:13.19, I went long again, just right there, which is something I never do. I don't know why I did this. Thinking, well, the original intent of the trade is going to play out. They'll get up to base hit even some more because the bulls are going to have the strength. And not only did they not have the strength, they came back down. And at this point, it was almost $1,500, $1,475, $1,485, something like that. And I just like, all right, let's just call it quits. I'm not going to risk anything else unless something else materialized later in the day that was very compelling. But at this point, I pretty much exceeded what I would like. I don't want to see more than 20 points usually on any given trade. And with one contract, I'd already exceeded that. I'll just scrub ahead. They came down at a 5:10.65. That was the consolidation above for a while. So did not take that trade, but it's dashed to tell me that I'm willing to take a recycle of that on the way back up. So this would have worked great. They went below, even identified an area like a zone here. It was 507.13 on the board from the morning, and I was willing to buy here and buy a little bit lower if they went lower, but instead they went back up. So okay, let me back up here. So they're coming back up into 5:10.65. This should have been 5:10.55. So when they came up close to it, you'll see them pull away. That's when I realized, oh, my bad. I had the wrong trigger point in this. So when it was clear that was going to be the trade, I just went ahead and canceled my pending trigger order, called that level good. It goes dashed in a second, I think. Yep, there's 5:10.55. So anyway, mistake number 3 or 4 for the day. I should have just, I think at some point around now, I just ignored it. I was eating some lunch and just didn't pay attention to for quite a while. So wasn't interested in taking any trades. I was not even around the computer when they came through these levels. Just at this point, I just wanted something a lot more compelling than what I had. So they fell through these, did not take these trades. They're even below here. The price is continuing to fall. You don't even see it because I'm not at my computer. I came back. I don't know what time it was. Let's see. There we go. So 1:38 or so. I started paying attention to what's happening. So this here, 5:03.25, it was kind of in the middle. This was a calculated level, but it happened to coincide. There we go, 5:03.50, and then this 5:02.55. This was a zone, very important zone, that I was willing to buy it here again. I know this day was a trend day down, but you get bounces very often at these levels because they're important. You see these bounces, but they didn't coincide with the levels that I had for the most part today. So I was willing to buy, and they never got there. So unfortunately, it was pretty close. And we'll take a look at some larger time frames, and I'll maybe give some hints of why that area is important. But I'll just scrub ahead here. They never got down to that. They got close. And in fact, when they did get close, see the 3 o'clock. Here we go. I don't like to take trades after 3:30, so it's getting pretty close to that. And look what they did. They came down 3:15, really close to the first place where I would have bought one contract and pulled up, and it's like, this point, I'm getting way too close to my line in the sand to call it a day. So yeah, I went ahead and canceled the pending order that I had at this point because I'm not going to mess with it after this. I don't want to be in a trade after 3:30. Although what I thought, and what I was telling myself is, if I see indications that professional buyers are going to come, or like professionals in general are going to come in and start buying in volume here to protect and defend this area, then yes, I would go ahead and buy, even one or two contracts, maybe even three if they got down to the low, because I had a really good feeling that this area could bounce, and maybe for the last 45 minutes or so, 50 minutes of the day, they would just pull way up and the bulls would kind of stage a rally. But not only did that not happen, there seems to be a little bit of indication that a lot of sellers jumped in at the very end. Not what I expected. So like they're pushing it down even more. And so they just kind of ended on the flat line in the aftermarket. In fact, I even have that. Let's just scrub ahead here. After the market closes at 4 o'clock, I turned on the after. Yeah, they're just kind of flat there. Just not a lot of conviction there. A little bit of a push there, but this is the end of the day. I mean, it's 4:15 or so. The futures close at this point, so I'll just go ahead and stop this. So pretty much a bloodbath for me. I mean, I've been in the hole a lot more than that with multiple contracts, but just with all the volatility and the sharp moves, I just want to trade one contract, two contracts at the most at these levels. That was my thought going into it, but didn't expect to just get whipped around. Where I allowed myself to get whipped around like that. I shouldn't have done this, and we'll talk about how the difference would have been if you'd played by the rules compared to what I actually did myself. Here's just a quick look at the daily chart and the channel that they got below. Probably not important anymore, but just let's go ahead and take this off. And they've been below for quite a while. Then 518.50 was that line in the sand on the weekly chart that they fought quite a bit. In fact, we can just take a look here at, say, an hourly chart. Here is 518.50 that they fought for quite a while, many days. Like, they've been below this for 2 days now. And anyway, so that area that I said was very important. Let's see if I can kind of zoom out here a little bit. That started at 503.50. So this area right here, they got almost to it. So 503.50 down to this zone here. So and so basically when price came up, just look at this here. Price was coming up. They pulled away pretty strong this area here. So once they got above this, they ended up gapping above this on this day, and they haven't been back since. But when they first time they come back to this, what you would call a breakout area, this zone is going to provide some type of support, generally speaking. And I'm just looking at a 60-minute chart, but you would want to consider all the other charts, and not going to talk too much about all the details on this how I like to look at it. But anyway, let's jump to the tracking log to explore the carnage today. First, the log based on the rules. So I'll open this up so you can see everything. 15-point fumble at the level based on the reversal at C, and the level in that was D, and then C was not triggered because of the consolidation, but you would have got a base on the recycle. You've got a 13-point fumble at the level down at B and a base on the reversal. So even as you were going down, you never would have hit the loss limit, although negative 28 points isn't great, but you would have been gaining some back. So with one contract, should have ended up around between $800 and $1,000 loss for the day. But here's what I did, and the way I coupled, I just all the stuff that I did ended up being around 29.5 points because it was exactly 14.75, and plus commission, so it was close to 1,500 total. Anyway, so I'm just calling it a 29.5 point fumble on a self-induced whipsaw. Just a bunch of dumb decisions that I made. So anyway, those are the trades. I don't know if that was helpful at all. Clearly, it was a very much a trend day down going into the day. I wouldn't have guessed that they would have fallen over 100 points, but they did. And it makes trading kind of exciting. The volatility is back, and it just helps. But I just want to be careful on these trades. I'm looking forward to kind of them settling in and having more normal trade, normal market days where I can kind of get back into maybe trading 3 or 4 contracts and taking base hits that are more predictable. But anyway, hope you found this interesting and helpful. Thanks for watching, and have a great day.